Hey everyone, and welcome to today's Explainer. We're jumping straight into the fascinating strategy behind Canadian Pacific Kansas City, or CPKC for short. Today, we're going to see exactly how they are building this highly resilient tri-national business. Now, if you follow supply chains even a little bit, you know rail is the absolute backbone of the economy. But what CPKC has pulled off following their historic merger, it's honestly something entirely unique. Here is our roadmap for today. We'll start with connecting a continent, then look at diversified business drivers, precision and technology, strategic land and capacity, resilient financial performance, and finally, wrap it up with the long-term outlook. All right, part one, connecting a continent. To really grasp their competitive edge, we have to look at the sheer scale of the network they operate. Now, this layout brilliantly illustrates their ultimate infrastructure moat. CPKC is literally the first and only single-line transnational railway linking Canada, the US, and Mexico. We're talking direct access to major ports all the way from Vancouver to Atlantic Canada, right down to the Gulf of Mexico and into Lázaro Cárdenas. And get this, with less than 10% of their freight volumes interchanging with West or East Coast rails, their north-south alignment perfectly positions them to ride massive macro trends, like nearshoring and the booming Mexican manufacturing sector. It's a huge advantage. Moving on to part two, diversified business drivers. Because let's face it, relying on just one region or industry in the freight business is pretty risky. Check out how beautifully balanced their book of business is. Merchandise is leading the pack at 47% of freight revenue, which includes heavy hitters like energy, chemicals, and plastics at 20%, plus automotive at 9%. Then, that's followed closely by bulk commodities at 35%, which is driven heavily by grain and potash. This diversified mix is essentially a giant shock absorber. When one sector hits macroeconomic headwinds, others, like their incredibly strong grain franchise across both Canada and the US, step in to steady the ship. And when we look at where this freight is actually going, it makes total sense why the market values this setup so highly. A whopping 41% of their freight revenue comes from goods crossing North American borders. That makes their single-line service absolutely critical for international supply chains. Think about it from a customer's perspective. You get to avoid the friction, the endless paperwork, and the massive delays of handing off freight between different regional carriers at the border. It's seamless. Okay. Part 3, Precision and Technology. So how in the world do they manage a continent-spanning network safely and efficiently? Well, the answer is heavy reliance on cutting-edge automated tech. Instead of just doing standard visual inspections, they've actually deployed acoustic sensors that literally listen for mechanical anomalies on the trains. This is a patented process, and it has slashed bearing failures during scheduled service by a staggering 95%. Plus, they use predictive wheel profile detectors. These can physically map out normal versus defective wheel profiles, so they catch problems way before they cause a breakdown on the main line. They also strap rail imaging cameras and laser scanners directly onto the undercarriages of their locomotives. This is their autonomous track geometry measurement system. It inspects the track layout in real time, catching potential issues with the left and right rails while the trains are just running at normal commercial speeds. So they're getting world-class safety data without having to compromise on efficiency. But here's exactly why they need that technology. While their reportable personal injury rates improved really nicely, dropping from 0.97 to 0.91 in the first quarter of 2026, their train accident frequency actually spiked over that same period, jumping from 0.38 up to 0.93. This specific metric is a stark reminder that these heavy, continuous tech investments aren't just for show. They are an absolute operational must-have to drag those accident frequencies back down. Let's shift gears to part 4, strategic land and capacity. Because beyond the rails themselves, they have some highly strategic physical assets. They are sitting on some prime real estate right in the heart of their network. Take the Kansas City metro area, for example. They have 180 acres of undeveloped land there that they are actively transforming into a high-capacity cold storage ecosystem. And up in the Chicago area, they've got a 75-acre site at Schiller Park that they freed up just by consolidating operations. That gives them the flexibility to either repurpose it for new growth or just sell it off entirely. Having that kind of space in such dense, high-demand logistics hubs is a remarkably rare luxury. All of this ties perfectly into their broader climate and sustainability strategy. To make sure expanding their network doesn't ruin their emissions targets, they're actively rolling out 100 new, significantly cleaner Tier 4 locomotives. But they are also looking way down the track. testing real-world hydrogen fueling infrastructure to expand their zero-emissions hydrogen locomotive fleet. It's a really forward-thinking move.
All right, down to the numbers. Part 5, Resilient Financial Performance. Let's see how these operations actually translate to the bottom line.
Looking at Q1 2026, they held up really well. Volumes were actually up 2%. They did face some year-over-year headwinds, though, roughly 4 cents from foreign exchange rates and 3 cents from fluctuating fuel prices, which dragged revenue slightly down to $3.7 billion. That nudged their core adjusted operating ratio up just a bit to 63.0%. But even with those pressures, pulling in a core adjusted diluted earnings per share of $1.04 shows serious fundamental stability. Now, lock it on this number, 2.75x. That is their target leverage ratio for adjusted combined net debt to EBITDA. After the massive amount of cash required for the historic Kansas City Southern merger, management has been super disciplined about deleveraging the balance sheet, actively working their way down to hit this specific target. And Wall Street is definitely noticing that discipline. It earned them a BBB+ with a positive outlook from S&P Global Ratings. S&P pointed directly to their revenue synergies and diversified mix, estimating that CPKC is going to generate over $3 billion in free operating cash flow annually over the next few years. That massive level of cash generation gives them incredible flexibility, allowing them to deploy at least $2.5 billion in share repurchases every year while still steadily hiking their dividend. Which brings us to our final section, Part 6, the long-term outlook. With a fortified balance sheet, where is CPKC actually heading? Well, look, maintaining an infrastructure mode of this magnitude takes serious capital. $2.65 billion is their massive capital expenditure target for 2026 alone. And the most vital takeaway here is that over half of that investment goes strictly to safety and network replacement initiatives. They want to be absolutely sure that physical rails can handle the volume growth they're expecting. By pouring that cash back into the business and keeping costs on a tight leash through their precision railroading model, they've set some highly ambitious targets through 2028. We're talking high single-digit revenue growth, double-digit core adjusted EPS growth, and converting roughly 90% of their core adjusted income straight into free cash. It's an aggressive, comprehensive strategy designed to extract every ounce of value from this tri-national network. So, let's wrap this up with a big question for you. When you stack up their one-of-a-kind footprint connecting Canada, the US, and Mexico, their high-tech autonomous safety operations, and their incredibly disciplined financials, as nearshoring continues to fundamentally reshape global trade, just how deep does this economic moat truly run? Thanks so much for joining us for this explainer, and remember to keep questioning the systems that connect our world.